Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be going over the top 5 stocks to buy right now on Robinhood. The market has been doing some wild things lately, especially since February. We've seen wild returns on the S&P 500. Meanwhile, all these different growth names that we know and love here on this channel have been taking a huge beating, and because of that, I wanted to update you guys on the best stocks to buy right now. If you guys have not already watched my video on why exactly the market crashed, I will leave a link above, but you should watch that before getting into this so you guys know what type of psychology we're having while going into choosing these stocks to buy right now. So with that out of the way, let's get right into the video. Alright, so here we are on my channel. As you can see, this is my channel's homepage. We're going to hit this community tab right here, and you can see that I asked you guys about 22 hours ago what stock I should invest $100 in, part of the YouTube portfolio. So people who are new here, every Sunday I ask you guys a question, and I have 5 stocks as the answer, and you vote on the stocks, and whichever stock wins, so whichever one gets the most votes, in this case it is Palantir Technologies. I put $100 into it every Monday, so I'm doing that in front of your face right now. We're going to move over to the public app. So here we are on the public app. If you guys would like to sign up for public, use that first link in the description below. You get up to $50 in free stock by signing up. So I definitely recommend that you guys do that if you haven't already. And as you can see here, it is a very nice to use app, and it's very similar to Robinhood. Like, as you can see, this chart almost the exact same as Robinhood. I honestly like the dark theme more. I use night mode on almost every single application I use. And public will never sell your trading information. They don't do any payment for order flow. And if you look right here, they have this entire different social media feature on it. So it's really cool to use, guys. And you can follow people, and it's just an all-around amazing investing app. So if you haven't checked it out already, remember, link in the description below. Check out public. Anyways, I'm going to deposit $100 right here. So I deposited $100. It's going to give me instant cash for me to buy Palantir with, and then we'll just go over here. We'll search in PLTR, which is Palantir's ticker symbol, and luckily we have Palantir at a very low price today, so I'm very happy about that. This one's going to be a good one. We look at its 3-month chart, it's down 51%, so we're getting a 51% discount on Palantir with all things considered. However, it's still up 26% on past 6 months, so we don't know exactly where it's going to go. I like Palantir personally. It IPO'd at $10 a share around this mark, so I'm a big fan of Palantir. Anyways, we're going to go to invest. Click 100, invest 100, confirm, and boom, I've invested $100 in Palantir Technologies, part of the YouTube public.com portfolio. Then it gives me the option right here to type out why exactly I invested in Palantir. So I'm going to type out $100 a week YouTube portfolio, baby. So make sure you subscribe to the channel so you never miss me investing in this YouTube portfolio, and you can follow the performance of it. Obviously, we are in some high growth names, so it's not doing too hot right now. However, I'm confident that my subscribers got me covered, and they're going to pick the best stocks for me. So let's post it, and boom, now I own $100 of Palantir Technologies. So remember, if you want to sign up for public, up to $50 in free stock. If you use the link below, you can also look at my personal holdings in my portfolio, and you can see what other people are posting. So definitely sign up. A bunch of celebrities use this platform, and yeah, that's that. Let's get right into the top 5 stocks to buy right now. Alright, here we are back on Robinhood. This video is titled Best Stocks to Buy Now on Robinhood, so I gotta use Robinhood and not public. However, the first stock to buy right now is Palantir Technologies. Who would have guessed? So this stock, guys, I really do like Palantir, and it's because of their very rapidly growing revenue. It's also kind of like a meme stock, but it's down at a low right now. As you can see, it's down 50% in the past 3 months. And if we go back to the year chart, like I said earlier, it IPO'd at $10 a share, so it's still up from that IPO price by quite a bit. However, guys, I don't think Palantir is gonna fail. Like, this company is growing fast, and I really like Palantir. So with that being said, that stock made it to number 1 on the list of stocks to buy right now. The next stock to buy right now, coming in at number 2 on the list, is AMD, which is Advanced Micro Devices. They are a huge competitor with Intel, taking a large amount of the market share away from Intel because of their chip technology is rapidly growing much faster than Intel's technology. I personally have a background as being a gamer, and I know for a fact that these microprocessors are doing much better than Intel's are currently, and the whole PC gaming community is absolutely in love with AMD's devices. So with that being said, I think AMD is a great stock to buy now. They also are having very rapidly increasing revenue, and if we zoom out to the 3-month chart, we're down 13%, so you're getting kind of a deal. But I wanted to show you guys the 1-year chart, because as you can see, it's kind of been trading in this channel with like the lowest price being around $74 a share, $75 a share. It hit it here too, and it has a huge support level here at around $75 a share. So I don't see it going much lower than $76 a share. So I think it's a great stock to buy now if you guys really do like AMD in the long term. Obviously, if there is a huge market correction, an overall market correction, not just a growth stock correction, AMD will be seeing a hit if the S&P 500 goes down. However, right now it seems like it's not going to get any lower than $75 a share, and that's why I have to include it. Tattooed Chef. This one's not new, guys. If you guys are a subscriber here on my channel, you guys know how much I like Tattooed Chef. First of all, Tattooed Chef is a rapidly growing brand. They do vegan frozen foods, but they're also expanding to other frozen foods such as Mexican frozen foods with their recent acquisition, but they're also expanding into vegan snacks, and they are already currently being sold in Target and Costco, and they're moving to other grocery stores such as Kroger, which is the largest grocery store chain in the United States. So guys, I really like Tattooed Chef. We'll go to the 3-month chart now. We're at a 31% discount. We'll go to the yearly chart right now. It is also currently around a price level that I don't see it going much lower than. I don't see it going much lower than $15 a share. I don't see it going much lower than $16 a share. That's when I'm going to start aggressively buying this, when it's at $16 a share. But the number one reason I love Tattooed Chef so much is because its financials are just so good. It has the second lowest PE ratio in the packaged food industry, and this includes all packaged food items. The one thing, it doesn't have as much revenue as some of its competitors, but those are in their late stage of their life cycle. Tattooed Chef is at the early stages, and people love Tattooed Chef. So guys, this one I really do like. DraftKings, another name that has been taking a hit here in the past few months since February, but if we look at this 3-month chart, it was actually withstanding the first initial growth stock correction, and it went to all-time highs. But since then, since the middle of March, as you can see, it's kind of fallen off a cliff. And I think this stock is a good buy. If we look down here, major support levels here at $35 a share, so there's definitely still room for it to fall, but it should be on your watch list, as if it's going down to $45 a share right now, it is something that is becoming more of a deal each and every day the more it falls. It had a high of $71 a share, and I usually see a good growth stock as their all-time high being your expected return. I'm not going to give you a time period length. It could take a few years, it could take 1 year, it could take 1 month. But if you invest in it at $45 a share right now, DraftKings is such a rapidly expanding company that I don't see it not going back to $70 a share. They're basically number one in the sports gambling industry, which is being legalized all over the country, state by state. You see them advertising at every sports game. I have many friends that use this. I even have a friend who works for DraftKings. So guys, I really like DraftKings, and yeah, on to the next one. All right, guys, so the next one is a bit boring, but it's JP Morgan Chase, and it's also the only one up right now because it is a cyclical stock. This is a banking stock, so banking stocks actually profit from higher interest rates because they can charge their debt holders, which are people who are taking out credit card loans, taking out house loans. They can charge them more interest, so they get more return on their investments. So they go up when there is troubling times in the economy. So as you can see on the 1 month, they are up 4.9%, actually no, 4.8%, sorry about that, 3 months they're up 18%. So this is doing basically the opposite of every other stock, but this one is one of those ones that you should be fearful while others are being greedy, because if we look here, it is just going up in the past year, 80% in the past year. Looking at their 5-year chart, they've been going up, up, up. And I always feel after a run this extreme, there's always going to be a little bit of a correction. It doesn't have to be a huge correction, but it's always scary to be buying something at the all-time highs, because if you guys do remember February, a lot of you guys did end up buying a lot of those growth stocks when they were at their all-time highs, and what happened? You lost about 50% of your investment. So I'm going to say be careful, but if there is still going to be this whole interest rate Armageddon, that we think there's going to be rising rates and inflation, then JP Morgan will definitely be one that benefits from this, and that's why I had to list it on the stocks to buy right now. Anyways guys, that's about it for the video for you guys today. I hope you guys enjoyed. I hope you guys learned something. Remember, if you use the link below, you can sign up for Public. It is new. I'm a new partner with Public, so I'm happy to say that, guys. I'm excited for what's to come, and I genuinely like their platform better than Robinhood. All right, I like public.com. It's a great investing platform. I can always see what other people are investing in, and it's just easy to use, and that's why I like it. My trading data is not being lost, so definitely check it out if you haven't already. Literally giving away free money, so why wouldn't you do that? I hope you guys enjoyed the video. I hope you guys learned something today. I hope you guys have made some better investing decisions as of lately, and we're doing this together. We're in this game together. I'm in it for the long term, guys. I'm ready to keep going and keep investing consistently and getting the average prices in this market. And I'm a growth investor because I'm very young. So if you guys are also young, that's always a time to consider taking on more risks. I did a poll of my audience, and most people have less than $50,000 invested in the stock market. So I'm going to assume that most people are young, around my age. Again, I'm 24 years old. I'm very, very risky, and that strategy does not work with everyone, but it works with me. And I'm going to keep investing in getting this average price. It's called dollar cost averaging. You invest consistently over the long term, and you will definitely be getting good results. And dollar cost averaging even works in long-term bear markets. Everyone's heard about Japan, how Japan, I believe in the 1980s, 1990s, forgive me if I'm wrong, reached an all-time high in their stock market, and they have not recovered ever since. But if you dollar cost averaged your way back into the stock market, so you keep investing over time, over and over and over again, you would be up right now on your investments, because the average price went down so much, and now it's slowly recovering. And you keep investing in the long term, you're going to get more of that average price, which is the lower price. So even if you invested at the peak, you would be up if you did dollar cost average. So I definitely recommend consistently investing into good companies. Look at their balance sheets, figure out how to read revenue growth, their income statements, read their 10K filings, know what risks are involved, and do your due diligence before investing in the stock market. Because guys, I'm not a financial advisor, unfortunately, and I cannot guarantee that my stock picks will make you money. However, I'm doing my research, doing my due diligence. I have 2 degrees in finance, and I genuinely love doing this stuff. So guys, that's about it for the video for you guys today. I hope you guys enjoyed, and that's about it. Peace.